Hello, everyone. This is Martin here, and welcome back to another weekly update. This time we're looking at a new month, a new trading month for February, and we're looking for the week February the 2nd to the 5th, I believe it is. Let's take a look. Yeah, February the 1st to the 5th. And again, you can see here we are all students rocketing towards the planet called Forex. The big news this week was the Bank of Japan announcing negative interest rates. Now, what does that mean? Well, it's not too often that a country does have negative interest rates. Most countries obviously need an interest rate to keep their economy going strong and keep looking towards increasing their interest rates, not decreasing it into a negative status. So, what this means is that the Japanese yen obviously is weakening. They're telling the world that their economy is not that great, and what it does is to the opposite pairs trading against Japanese yen, they obviously are present some buy opportunities. If you're looking to sell, looking to trade the Japanese yen, you be with some of the currency pairs, you're looking to sell the Japanese yen against the other currency pairs that are trading against it. So gives us some really good trading opportunities. The announcement by the Bank of Japan is certainly a significant announcement. It is, and it will be for quite a long time. This is certainly going to affect the economy of the country and the currencies that trade against it. So let's take a look, see what trading opportunities we've got going for us in front of us for this week. And the very first pair I'm going to turn to is the okay. We've got the Euro USD daily here on in front of us. And last week I mentioned that we were in a sideways triangle. We're looking for a breakout. You can see prior to last Friday's close right here, we were kind of just going up and down, up and down. We went down a bit on the previous Friday's close right there. Then we went up and up and up and back down again with a huge bearish candle right here. So again, we're within the triangle, and this is the triangle I'm talking about. This is the lower trend line. This is the upper trend line. See, the upper trend line is pretty well straight across. The upper trend line is ascending. So what normally happens with an ascending triangle, price would normally break up to the upside, but in this case, we've got another huge, long-term upper trend line with this pink line. You can see that right here, as well as again, this is it's a nagging resistance area that that I'm showing you in the gray rectangle, as well as the dotted line, which is the 100 SMA. So we've got all kinds of resistance ahead. Even if price was to bounce off the lower support here, bounce back up, we don't really have that much higher to go. Back up to here again, continuing with the sideways channel, or up a little bit higher to meet up with this trend line right here, and then back down again. So basically what I'm saying is just wait for some sort of evidence, either a breakout to the downside or a break above the upside, and that's all we can do. So I kind of would not trade this pair for at least a few days until we get some sort of trend direction one way or another. The MACD you can see here is just barely above zero. It's gone sideways for quite some time since the beginning of the new year. Okay, right from the end of December, beginning of January, it's really gone nowhere. And the other thing is you can see the moving averages completely sideways. Here's the 50, here's the 21. I mean, just going sideways. So I would basically stay away until we get some really good confirmed trend direction. Okay, next one, we've got the British pound USD, and guess what? Same thing. Price basically, this previous week has just gone down, up, down. There's not much you can do. It's really difficult to trade when price is jumping up and down that way. The overall sentiment is still bearish, You can see we're still in kind of an overall downtrend. The MACD is still well below zero. However, the histobars are rising, and what that means is that the downtrend is weakening. There may be a reversal to the upside soon, or it may just continue going back to the downside. Last week, I did mention that the overall trend was down, which is true. You can see that right here. I did say sell below the 141.89. Price never really closed or went below the 141.89, so that was good. We kept you out of trouble, even though price was jumping up and down. And even if you saw this black bearish candle, you kind of had to wait until it closed below the 141.89 for you to enter a trade. That never happened. I did mention, though, look out for a counter trend trade above the 143.64, and that was up here. And same thing, price never really closed up above that. If it would have, then that would have given us the bullish evidence to trade this pair to the upside. That never happened. So again, keeping you out of trouble there. And this week I see we're in a sideways range. That still continues from last week. Now this is interesting. I'm going to show you this. The last two weekly candles were showed indecision. So I'm just going to quickly change to the weekly chart. Let's zoom that. Okay, you can see that with this candle, this is kind of a spinning top. I can move this out of the way, the red vertical line. So you can see that huge upper wick, huge lower wick, a little tiny white body. Again, just basically indicating a big war going on between the buyers and the sellers. Nobody was really winning. The week after that, which was last week, same thing. Huge upper wick, huge lower wick with a little tiny black body. Again, nobody really winning the war here. Some pretty good fighting going on. And what's going to happen this week? Well, price is either going to break above to the upside above this area right here, okay? And let me just take a look. I may have to switch to the daily chart, but again, that's the 144 10 area, or price may break below that. But again, this is major support here. We basically are at the 2009 low. Let me just go back to the daily, okay? And you can see that right here in this area was the 2009 low. So here's major support. So there's not much room to go to the downside, but it's got to either break out to the downside or break up to the upside for us to see what's going to happen next. So basically, I'm saying just kind of wait. If you can take a counter trend trade above the 144.20, which is right there, 144.20, you can take a counter trend. If price closes above that, then we've got a bit of a ways to go toward the next resistance area right here. Or watch for price to bounce off the support. What that means is watch for price to come back down again. Look for bullish evidence to the upside before deciding what to do. Or price may just break down below that. Okay. Again, just wait and see. Next one, we've got the, okay, this is the Australian USD right here. And last week, I said that the overall trend bias was down. That was true up until last week, but it certainly reversed in a big way. It seems to be going a little bit higher, but now it's stalling. So kind of wrong there. It did make a pretty good reversal. I did mention sell below the 69.50, and we kept you out of trouble there. It never really went below that. But I did say counter trend above the 70.50, and that was a really good mover. If you would have taken a trade above the 70.50 area, you would have made some really amazing pips. And for this week, basically, I see that we are in still in a counter trend movement, possibly a little bit higher, but I'm saying watch out, caution, we are near resistance here. I mean, price may go from here up to this area right here, okay, which is the 71 11 area, or price may just go up to the next level about there, 71.54, and then bounce back down again. So just a bit of caution there. The other thing you could do is wait for a pullback, wait for a pullback. Okay, and what that means is wait for a slight pullback like that, and then look for bullish evidence to the upside. Okay, so you could be looking to do something like that. Watch for price to go higher, or and the other thing is, if price does go higher, then watch for a bounce off of the resistance. It could be off of this area right here, or if the price goes higher, to retest this area. Here's a confluence with the 50 SMA, the 100. So price may go up and then bounce back down again. Okay, so again, you can decide, you really have to wait for some sort of evidence. You can't really just take a trade right now. You kind of have to wait a day, couple of days or so. Now, next one, we've got the New Zealand USD, and this one is completely kind of just going sideways. Um, I'm going to say for this week, just wait for evidence, either to the upside. Price has to break above this area right here, and that is the 60, 65, 50 area. Price has to break above or close above to go higher, or price has to break below this area right here. You can see the support that I've indicated with the gray rectangle. Okay, so just wait and see. You've got to, you got to let this play out for a couple of days. Last week I said the overall trend was down. We still are in an overall downtrend. The MACD is below zero. The histobars are rising slightly, not a lot, which is indicating that the downtrend is still fairly strong. If the downtrend was really weakening, the histobars would be getting a lot smaller and moving up toward the zero level. It's not done that just yet. And I also mentioned last week, sell below the 64.58, and that 64.58, that was about there. So in that case, you would have that would have been a good trade. You would have made some pips, not a lot, maybe 40, 50 pips there. Okay. Again, this week we are in an ascending triangle. You see the lows are becoming higher. Here's a lower low. Here is another higher low. And like I said, price, we just have to wait and see. Will price go down further and break to the downside, or break to the upside here? Wait for evidence. Now, it's a different story with the US CAD. Here is the USD CAD. Here is for the first time we can see some sort of um, sustained movement, where so far with the first three or four pairs, we haven't seen any sustained movements at all. Basically, those currency pairs were trading sideways, a lot of sideways congestion up and down. We're looking for breakouts and some sort of price action, either to the upside or to the downside. However, with the US CAD, it has fallen, 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 fallen. And the main reason for this is that as you know, the Canadian currency is tied very closely to the oil commodity, and oil has actually bounced up by quite a ways recently. And when oil is bouncing higher, that means the Canadian currency is getting stronger against the U.S. currency. The U.S. currency, being the opposite currency, is getting weaker. So just to show you what I mean, okay, this is the chart for the USD CAD daily, okay? I'm now going to switch to the chart of the oil. This is the WTI daily chart for oil right here. You can see that. The WTI stands for West Texas Intermediate, and this is a light sweet crude oil. And you can actually find this on your on your MT4 trading platform. It is, I believe it is on most trading platforms. Just look for the symbol WTI and you'll see this chart. I've got it up here right now, and you can see oil has bounced from a low here, a low of about $28, $27 and change, all the way up to $34. So oil may possibly go a little bit higher. Again, we're reaching a resistance area with the 50 SMA. Okay, so oil may go up to about here and then bounce down again. Again, if oil continues to rise higher, that means the US currency is going to fall against the Canadian dollar. And remember, against the Canadian dollar, not necessarily against other currencies, just against the Canadian dollar, since we're talking about factoring in the oil over here. So let's go back to the US CAD right here, the US CAD daily chart, and I'm still looking for the counter trend, which I called for last week, to continue in the sell direction. I'm again, what you can do is wait for price to come up just a wee bit, like a bit of a pullback, maybe right about there, and then look for a selling opportunity to the downside again. Okay, last week I did say that the trend bias was up. We are still in an overall trend bias, which is up, and I did mention last week, look for counter trend selling, sell now, or again, the other idea is just wait for a pullback higher and then sell, or taking a sell limit order. But in this case, if you would have taken a sell now trade, I just want to show you something. Okay, last week with this red vertical line, that was the close of last Friday, the first trading day, Monday, Monday right there with the white. Let me just take that. The white bullish candle, that was the Sunday, Monday trade. If you would have placed a, let's say, a sell limit order there, okay, sell limit order there with a stop loss just on the other side of that blue line, you would have made some really darn good pips. And let's take a look. Good for, well, 300, over 300 pips, which is pretty darn good. Supposing you didn't do that, supposing you're looking and waiting for evidence. Okay, so Sunday, Monday, you waited, you didn't trade, you saw a big bullish candle. Okay, now you may be thinking, well, I should be taking a buy trade, but again, see it's really difficult to do that because you're between two moving averages. Right here, you are between the 21 and the 8 EMA. You can see that with the light blue line, but also you were right at resistance, okay, with the gray rectangle. So I would have just waited for a bit. Um, and the next day, obviously, the price you can see was big black bullish bearish candle went right down again below the 21. If you would have taken a trade at the open or at the close of that candle, that you still would have made some pretty good pips. So I believe again this week price is going to go down further. You might just want to wait for a slight pullback before taking a sell trade to the downside. The MACD is still above zero. However, look at the decline, the steepness of the histobars, which is indicating that the uptrend is certainly weakening fast. Okay, so the momentum of the uptrend is completely reversed. And now we go to the US Swiss franc. Okay, with this one here, you can see basically prices on an uptrend. The US is gaining strength against the Swiss franc here on the daily chart. We're basically within a up bullish flag channel. You can see that right here. So price went down, price went up, price went down, price is up, and it's now looking to break the upper channel line. And I believe price is going to actually retest the 2015 high, which is the 103 or 103,003. So I believe price is going to go higher. However, what you want to do is wait for a bit of a pullback. So in this case, I'm saying you can possibly take a buy limit order if you wait for price to come back down to this area. So let's say placing a buy limit order just above the 101.80 area, 101.80, perhaps a little bit higher right there. And if price comes back down, it just may, then you're going to possibly get a fantastic entry. And if price goes all the way up to the 2015 high, you're going to make approximately 100 pips. So that's good for 100 pips. I certainly believe price is going to retest the previous high. Just take a look at your left over here. Okay, you can see that is the previous high right there. And so that's what I see, uptrend continuation. Last week I said buy now. If you would have done that, you would have made a lot of pips if you would have bought immediately after or with the Sunday, Monday close, or even the next day after that, with this white bullish candle. Okay, and if you also would have waited for a pullback, which I did indicate last week, and placed a buy limit order, you would have made even more pips. So because price did pull back to the gray rectangle, which was support. Okay, and finally, we've got the USJP. Huge move. This is the indication of what happens when the Bank of Japan certainly introduced negative interest rates. This really weakened the Japanese yen, especially against the U.S. currency, which is one of the world's strongest currencies right now. So price actually shot up for, let's take a look, from here on Friday's close. It went up altogether over 300 pips and closed about 243 pips in the pot for the buyers. So the buyers had a pretty good day. This week, caution, caution. I'm going to suggest you play a pullback play. And what that means is wait for price to come back down. Price may come back down to the 50 um, SMA. Also, you can see the 100 SMA right here. So it's an area of confluence. I've drawn in the gray rectangle, but I've also given you a little line right here, okay? And that is, if you can place a buy limit order just above the 120.22 mark or level, if price comes back down there, you're going to be in positive territory, and you're going to be on a rocket ship, hopefully all the way up to at least this line, or even higher after that, but at least to this level right there. So that's what I see. I see that the uptrend is continuing because of the news out of the news from Japan with their currency, negative interest rates. But the main thing is look for buying evidence after a pullback only. Don't take a buy trade right now. Price just went up too high too quickly in one big swoop. So you want to wait for a bit of a pullback. Okay. You want to wait for price to come back down to here. And then you want to look for some sort of evidence to the upside, okay, to retest either this area and even higher once it gets to about there. Okay, so last week I'd said the overall trend was down. It basically was down up until we went up until price really reversed right here, and but I did say counter trend, buy above the 118.88. If you would have done that, my goodness, you would have been in the money. Um, Counter trend, buy above the 118.88. So there's the 118.88 right there. That would have been that's catching that huge Friday's candle pretty well, and you would have made, like I said, 230 pips or more. So that's what I said last week. Now, I've got a couple of other pairs just really quickly. We're going to have a quick look at it. I'm sorry this video is just becoming a little bit longer than I want, but let's go to the CAD Japanese. Okay, let's take a look here. Here is the Canadian Japanese daily. Again, I'm looking for counter trend. We're in a counter trend right now, but caution, caution. Okay, price may not go up that much higher. If anything, wait for a pullback. Do not take a buy trade right now. Wait for a pullback and then possibly place a buy limit order above here or just around the support area with the gray rectangle. Okay, price may then go up to this level right here. Again, the Canadian dollar is stronger against the Japanese yen, mainly riding on the back of positive oil prices increasing, of course, the Japanese yen weakening. So again, price may keep going higher, and may once it gets past this level, it may go all the way up to the and retest the 100 SMA. But again, wait for bullish evidence after a pullback only. Don't just take a buy trade right now. You can see the MACD is a steep up climb, which means the downtrend is weakening, and we may be the actual trend may be reversing to the upside. Okay, and let's take a look here at the next currency pair. EuroCAD, I mentioned that last week as a possible sell opportunity. Price did kind of went sideways for a bit, but then dropped down in a major way. You would have made some good money. I did say last week, counter trend, take a sell trade. You would have been in the money on that one. This week, wait for a pullback up higher again, and then look for selling evidence to the downside. I believe this pair is still going to go down. The euro, at this point in time, is probably a weaker currency against the Canadian dollar. And so again, just wait for a pullback to the upside, then look for selling evidence to the downside. Also, you can look at the weekly candles for selling evidence. I just quickly want to switch to the weekly and zoom in. Okay. Now look at that. Here's a huge bearish engulfing candle. See the black candle completely engulfs the previous white one. We have a bearish pin bar. So I believe price is still going to keep going down lower to at least the next support area. Okay, let's switch back. And there you go. I believe price is going to keep going down, but caution, uh, wait for price to go higher uh, and take sell trades after a pullback. So after rallies, okay. And do I have any more? No, we're going to leave it at that. There may be some good opportunities in the British pound, Japanese yen. Take a look at that. And if you want, email me. Send me some questions about the British pound, Japanese yen pair, and tell me what you think. Do you think price is going to go higher? Price is going to go lower? What's going to happen there? I'd be interested to hear what you say, and then I'll give you my comments, and we'll leave it at that. So again, thanks for watching. Happy trading. I'm sorry this video took a little bit longer than I want. We'll look at, shortening the videos in the future a little bit more, but take care. Happy trading. I'll look forward to your questions. Bye for now.